Okay. You have the floor.
Okay, you all can see my slide.
Not yet. Yes.
My,
Now, okay.
Yes.
Yes, can see.
Slide.
okay, wait. Why I can click this? Okay, can you all see my slide?
Yeah.
Yes.
Presentation.
Yes, Aisha, yes.
Okay. So, okay, today we are from Group 1. We present our definition of income. So, my name is Siti Aisyah and another two members is Nurul Afifah and Nurizatu Shazwani. Okay. So, before we go to what is income, I would like to introduce about the law that governing income taxation in Malaysia is the Income Tax Act 1967. So the scope of taxation is under Section 3 of the Act, provide that a tax to be known as income tax shall be charged for each year assessment upon the income of any person occurring in or derived from Malaysia or received in Malaysia from outside Malaysia. So meaning that this section set two circumstances that income tax will be imposed on income when a taxpayer derive that income from Malaysia called as Malaysian source income, and the second when taxpayer derive income from outside Malaysia called foreign source income and receive that foreign source income in Malaysia. This income is only subject to Malaysian income tax at the time the income is received in Malaysia. But however, with the effect from 2004, only the sector of banking, shipping, insurance and air transport income received from foreign will be subject to tax. Other than that, is exempted. Okay, next. Okay, actually there is no statutory definition of income, meaning that no solid definition of income. But we can recognize income by these three factors such as the nature of consideration for the receipt, and the second, the ordinary cost of conduct of business or employment, and the third, the periodicity of receipts. So these three factors would be considered to determine whether a receipt is capital or income. The details will be explained in the characteristic of income. Okay. Uh, since the income receipt is subject to income tax, it is important to examine the boundaries. So under the Income Tax Act 1967, the income categorized the classes of income in Section 4 and Section 4A of the Act. So in Section 4, it is classes of income on which tax is chargeable. The income under this act is respect of A as the gains or profits from a business for whatever period of time carried on the business itself, and B as the gains or profits from an employment, C as receipt in dividends, interest or discounts, D as receipt in rental, royalties or premium, E as receipt in pension, annuities or other periodical payments that not falling under any of the classes above. And the last F as gain and profit not under any of the all above classes of income. F4 serve as a residual section to catch all the miscellaneous income which refer to one-off receipts. Okay. However, in section 4A, Section 4A, it is special classes of income on which tax is chargeable. Why is special classes? Because it is the income of a person that is not resident in Malaysia for the basis year. The income under these special classes in respect of the amount paid as consideration because of the service rendered in Malaysia in connection with the use of property of rights belonging that not to the non-resident person, or the installation or operation of plant, machinery or apparatus purchased from that non-resident person. And the second, the amount paid as in consideration due to any advices given or assistance or service in connection with management or administration or of any scientific, industrial or commercial undertaking, venture, project or scheme. And the last one is the rental or other payment for the use of any movable property made under agreement, such as food truck, vehicles like lorry, aeroplane and boat. So all these kind of income are subject to tax, but as Section 4A imposes withholding tax on non-residents. Okay, next. To recognize the income, there is some characteristic of income will be explained. So the first one is the regularity. So generally, a series of similar transactions carried out by the taxpayer may indicate that he is trading. The gain would be the income in nature. However, in situation where trading intention is clearly established, one transaction is just enough to recognize it as gains. So there is no need to show the repetitive transaction as evidence in trade. For example, company A established received rental income for 2,500 a month for letting out of premises. So this amount was recognized as income, then will be subject to tax. So next, I will pass to Afifa.
Okay. For the second characteristic is mute. Yeah. Okay. For the second characteristic is income distinguished from saving. This means that saving are not subject to income tax because it is not income received. A person is chargeable to tax not on what he saved from going out of his pocket, but on what goes into his pocket. Asha, mute.
Oh, wait.
Okay. Okay, for that statement, can you understand what's the meaning of that statement? Let me show you one example. For example, a manufacturer gave holiday package benefit to the contractor because of their good performance. Is it considered as income received to the contractor? To answer this question, we need to know, is it convertible to money or worth money, or can it be sold to the others? If it cannot be sold to the others, then it will not consider as income received because that benefit will only save the contractors from incur their own pocket money to have a holiday. This considered as their saving. But if yes, if it is convertible to money, which means the contractor can sold the holiday package benefit to others and they gain income, it will the money will goes into their pocket, right? Which means contractor gain income from that holiday package, so it will consider as income received. Okay, the next. The third characteristic is income must be received, but it is not necessarily received in the form of money only. Instead, income need to be received in form of money worth, which means something that have monetary values. Let us look into example of a holiday package benefit just now. If it is not if it is not convertible into money or money's worth, then it is not income receipt. As for the check, it is not in form of money, right? Before we cash the check, but it's still considered as income in the year we receive the check because it has its values. I hope you all clear with the third characteristic. Next, customary receipt are income. Actually, income is not necessarily come from employers or trade debtors only in the form of salaries or sales. We can look into example of clergyman. Clergyman here means a religious leader or male priest, especially a Christian one. A strangers or outsider will be giving voluntary payment to them in exchange to their services, for example, their prayers or their advice in certain events. Even though it is not it is even though it is volunteered pay by the strangers, but it is considered as profit or gain in the hand of recipient. Recipient here is clergyman. But if the payment attached to an office employment or vocation only. Vocation here means a strong feeling of suitability for a particular career. So in this case, it can be attached to vocation as a priest. Thus, the voluntary payment considered as income receipt and will be taxable to the clergyman. Okay, the next characteristic is income is illegibility. The next characteristic of income is illegibility is not relevant to income accessibility. Here, illegal income will also be taxable. There is no distinction between income from legal and illegal activities because both are taxable. So, the owner of the illegal business cannot avoid to pay tax in defense of their illegality business. It is depend on whether they constitute in income receipt or capital receipt. For example, here is illegal trafficking in liquor and illegal sales of drugs. It considered as income receipt because it related to the main activity of their business. So, they will be taxable. Now, we will look into a more detailed example. Next. Okay, here, KKK Sendirian Berhad, their main activities is providing room for gambling and also operating pinball machine. Then, in early October, the government declared their business as illegal business and they need to close down in the October. But KKK Sendirian Berhad still operate their business until December. The question here is whether the company's income from the pinball machine and also rental of gambling room from October until December is liable to pay tax or not. The answer is definitely yes, because it is income receipt where the revenue come from business main activities. The fact that the receipts are illegal is irrelevant to the issues. Okay, let's move to the next characteristic. Speculation is not income. Do you know what is the meaning of speculation? It is where the trading of financial instrument that involve high risk, where we did not know what the exact outcome of that trading. We don't know, are we going to gain, are we going to get gain or are we going to suffer from loss? We only expect the returns. Did all you get what I mean? Okay, for example, here is gambling activities or share acquisition. Sometimes this activity will produce gain and sometimes we will suffer loss and it is unexpected. So the gain from these activities is not income in nature and will not be taxable. This is if that activities is just their hobby. But how if the person that carries gambling business, which means that they are professional gambler? The gain received is considered as business income and it definitely will be taxable. The next will be presented by Nurizatu Shazwani.
Okay, thank you, Afifa. Now I will continue with the next point of characteristic of income. So the next is about the reward for service. So basically, reward for service is considered as income receipt, because it will be taxed at the end of the year. So the example of reward for service is when the customer pay a tip to a waitress or hotel staff, hence the income will be taxed. This is because the tip they receive by the hotel staff or waiters the tip received by the hotel staff and waiters will be income since it regularly operated in nature. The income they receive is based on service that they provide to the customer. So and their service will be assessed either as income from a profession or employment income. So the next point is about the conduct of taxpayer. So basically, conduct of taxpayers will be divided into two, which are when they dispose of capital asset and also when they dispose of trading stock. So if a person dispose of capital asset or intangible assets such as goodwill, or a right to make a profit, it falls under capital receipt. Hence, it cannot be taxed at the end of the year. For example, ABC company sold an all office, uh, and they received a gain from that disposed of asset. Thus, the amount cannot be taxed because the company had no intention of seeking profit at that time. However, if they dispose of trading stock, it will fall under income receipt. This include compensation from trade creditors for defective stock and also subsidy received to relieve a taxpayer from revenue expenses. Okay, for example, ABC company buy a raw material from a supplier Z, and when they receive that raw material, they found that a few different items. So supplier Z give a compensation to the ABC company. Hence, that amount that ABC company receive will be taxed. This because the cost of the raw material just now is a deductible expenses. Thus, it under income receipt. And income receipt is effectively to reduce the amount of deductible expenses. So next about gift. Gift also is one of the characteristic of income. So gift is not considered as income, and it falls under the capital receipt. It's because because the person this because they voluntarily give the person voluntarily give the gift to employee or another person with personal reason and unconnected business or employment. For example, Sarah's company give a cash gift to Sarah on her wedding occasion because she had shown a good reputation since she worked at that company. And this was a totally unexpected gift, and also the payment was made for personal reasons, as which is wedding, hence it unconnected with the employment. So next. So last but not least, capital appreciation. Uh, Capital appreciation is referred to an increase in the market price of an investment. Capital appreciation is calculated at the time of disposal of an investment as the difference between the sale price and the purchase price of an investment. For example, Ali purchased 100 shares of company XYZ for 4 ringgit per share, and after 3 months, the shares price increased to 5 ringgit. This means that the value of the investment has increased from 100 ringgit to the 500 ringgit because the amount of capital appreciation is 400. And that amount 400 ringgit is not an income and is not taxable at the end of the year. Next. So next, it is a summary of characteristic of income that me and Afifa just presented just now. So basically, whatever is under an income receipt, it will be taxed. But if it's under a capital receipt, it will not be taxed at the end of the year. Next. So the next is about the relationship of income and source of income. Generally, income will flow from a definite source. The source is termed as a capital. Disposal of a source of income is capital, while the receipt of income is taxable. So that's from us. Thank you.
Okay, thank you for the first group that presented. Actually, this topic is I would say it's a revision, right, on the income, the income definition. Yeah. So it's a very basic information, right? You should be able to understand the whole topic, right? But normally when it comes to question, of course, the question is very theoretical, where you may be given a scenario and then you have to decide whether the income is subject to tax or not. Yeah. And if it is, then you have to justify why it should be taxable, and if it's not, why is it not taxable? So it's all about the justification. There's no right or wrong answer, right? So when, if, for example, in the case of definition of income here, normally we see that, of course, the RB, we always say that, okay, the income is taxable under A, B, C, D, E, and if not, it's F. Yeah, so that's why the F is known as the residue. Yeah, but of course, as a taxpayer, we always find that, okay, this income is not taxable because you have to justify, right? So most likely you will use the capital, right? Income is in capital in nature. So again, it's always about justification. Yeah. So again, in your answer also, you have to provide the justification and then see whether income. So if you're looking in the professional exam paper, right, this kind of question is always asked. Yeah, so even though you are now doing advanced taxation, but that's why we also include this topic as a presentation to ensure that you actually recall all this information and then be able to justify your answer given a scenario. Yeah. Um, yeah, I think the group has covered the topic comprehensively. We're talking about the definition. All right. Unless other students wants to ask question for clarification.
I have a question.
Yes.
Sajwani, you mentioned about gift and reward, right? May I know how to differentiate between the two? Because both seem to be the same concept to me.
Hello?
The difference between gift and rewards.
Okay. So the difference between gift and reward is based on the personal reason, which is I mean, like, gift the employee may be can I stop? Wait, maybe employer give a gift to their employee with an unexpected, but the rewards, like, macam mana cakap? Apa sebenarnya? Allah. Basically, give
Which one is taxable?
which taxable the
Reward.
gift is not reward lah. Reward will be a taxable, but gift is not taxable because it made for a personal reason and unconnected with the business and employment.
So, for example, if you see that every year the company reward the employees in the form of bonus, all right? So
Yes.
that is reward for the performance, and that related to the employment. But if it's stated as a gift, all right, so normally gift, all right, the general understanding is that gift is something which is personal in nature, all right? The boss may like you and give you a gift, right? But for you to get a reward from the company, it has to be deliberated by the office management. Yeah, but the gift, it could be from the boss, even though it's still under employment, but then it's a personal. Yeah, so that's how you see the difference between gift and reward. So we always refer reward to the performance. So whenever you are rewarded based on the performance of your employment, for example, so that is taxable. So that fall under your employment income. But if it's a gift, then it's a personal, therefore it's non-taxable. Does that fall into your definition, Shazwani?
Yes. The personal yeah,
Anything else? Yeah, there are, for example, when I first look into, the first part where you talk about the income of the non-resident person, yeah? So at the advanced level, you really have to understand your section 4BA. I call it as a section 4A capital, not A capital. I call it as a section 4BA. Yeah, later when you see your topic on withholding tax, when topic related to your double tax agreement, right? So all this goes back to the non-resident, right? And then how you actually tax this non-resident income, right? And most of the time it's based on the tax through withholding tax provision. So it's all interrelated. So why is it that? Because you say that, okay, income is, in this case, we say that, okay, income of the non-resident person, but you know that non-resident person is not in Malaysia most of the time. All right. So in order to tax them, so that's why we use the provision under withholding tax. Okay. So, but many students actually forget about that section 4BA, and that section only applicable for a non-resident person. And then the foreign source income, all right, even though income from the foreign, yeah, but is exempted from YA 2004. Remember that you have visa, right? Banking, insurance, shipping, and airline. So these four industries, foreign income is not exempted. Yeah, so later when you do your double tax agreement, right, you will further explain on these sectors, right? Because those are the industry that wherever income derived will be taxable in Malaysia. Okay. So, okay, that's already about 20 minutes, right? Can we go to the next group? Thank you for the first group.
Doctor, may I start now? Sarah ready?
Yes, please.
Assalamualaikum and hi everyone. My name is Nur Adibah Husna binti Azali and my group members is Izati and Sarah Rosli. Okay, the topic that we're going to present today is derivation of income. Next slide. Next slide. Okay, the derivation of income tax can be put under certain categories. As you can see, this is the categories. Okay, under section 3 of the Income Tax Act, in order for the income to be subject to income tax, to be subject to Malaysia income tax, it has to be accrued and derived from Malaysia. Income will be chargeable to act under section 3 when they come into existence and unconditional right to receive it in Malaysia or when it is received from a specific source in Malaysia. Next slide. Okay, first I will focus on section 12, derivation of business income. Under subsection 12.1, where for the purpose of this act, it is necessary to ascertain any gross income of a person derived from Malaysia from a business of his, then paragraph A, subject to subsection 2. Actually, subsection 2 is about the gross income from the business that is not attributable or related to operation of the business carried on outside Malaysia should be deemed to be derived from Malaysia. Where, next slide, where the business or a part thereof is carried on in Malaysia. B, any of the gross income of the business from whatever derived consists of dividend or interest to which subsection 24.4 or 5 applies. Subsection 24.4 or 5 is actually about the basis period in determining the dividend and interest for the relevant period. Next, the dividend or interest relates either to a share debenture, mortgage or other source which form or has formed part of the stock in trade of the business or where only part of the business is carried on in Malaysia of that part of the business or to a loan of the kind mentioned in subsection 24(5) granted in the course of carrying on the business or that part of the business. For example, under subsection 12(1), later I will continue with the example because I missed the example. Next slide. Okay, subsection B1 and 2 is actually about the business consists, if the business consists wholly or partially of the manufacturing, growing, mining, producing or harvesting in Malaysia, the gross income from any of the sales of the product taking place outside in Malaysia or export in the course of carrying on the business does and subparagraph 1 does not apply, an amount equal to the market value of the article produced, product or other thing at the time of its export should be deemed to be gross income of that person derived from Malaysia from the business. For example, in the paragraph B, manufacturing water pump company in Malaysia secure an order from Nepal company to supply water pumps. The export of water pump to Nepal is deemed to be derived from Malaysia as the gross income from the sales of its manufactured product to a place outside of the Malaysia, which is Nepal. Next slide. Subsection 12(3) is actually about provides the determination of income from a business derived or deemed to be derived from Malaysia with the existence of a place of business in Malaysia. A place of business include a place of management, branch, office, factory, workshop, warehouse, building site or construction, an installation or an assembly project, a farm or plantation, and a mine and oil or gas well, a quarry or any other place or extraction of natural resources. Subsection 4 also deem a person to have a place of business in Malaysia if the person's next. If the person carries on supervisory activities or has another person acting on his behalf who habitually conclude contract or habitually plays the principal role leading to conclusion of contract that are routinely concluded without material modification. B. Habitually maintain a stock of goods which such person deliver good or merchandise or regularly fills order on his behalf. For example, a non-resident company distributes its product in Malaysia through an agent in Malaysia. Upon receiving an order, the agent fills the order and delivers the product directly to customer in Malaysia. So the income of that person should be deemed to be derived from Malaysia from the business. Okay. Next, I will pass to Izati Azizan.
So I will proceed. Hello. So I will proceed to the next subtopic, which is general provision as to employment income. Section 13, subsection 1, state that gross income of employee in respect of gain or profit from an employment includes Section 13, subsection 1A, any wages, salary, remuneration, leave pay, fee, commission, bonus, gratuity, free or allowance in respect of having or exercising the employment. Gratuity is a payment is attributable to the past service or employee. The prerequisite is employer give benefit in cash or kind that can convert into money to employee. For example, employer give laptop to their employee. Next is section 13. Back previous. Section 13, subsection 1B. Amount equal to value of the use of or enjoyment by the employee of any benefit or amenity provided for employee by his employer. This benefit or amenity is not convertible into the cash. For example, employer give to their employee driver, gardener. Okay. So section 13, section 1B1 is a medical or dental treatment or benefit for child care. Second is leave passage within or outside Malaysia. is within Malaysia, not exceeding 3 times including meals and accommodation. If outside Malaysia, is up to maximum is 3,000. Next is benefit or amenities used by the employee solely in the connection with the performance of his duties. For example, employer provide motorcar and petrol for employee is regarded to be used privately if used for travelling between office and employee home or kept at employee's home, and that motorcar can be used by his family or that employee. What is benefit or amenity falling under paragraph 2? Next, section 13, subsection 1C state that amount in respect of any of the use or enjoyment by the employee of living accommodation in Malaysia by or on behalf of the employer, rent, free or otherwise. This living accommodation, they have three categories. First is living accommodation for employee and or service director. Second is living accommodation for director of control company. And third one is hotel accommodation for employee or service director. These three categories, they have three different calculations of tax. Okay, section 13, section 1B said that so much of any amount received by employee from unimproved pension or provident fund, scheme or society would not have been so received if employer had not made contribution in respect of the employee to the fund, scheme or society or its trustee. And section 13, 1E, amount received by the employee by way of a compensation for loss of the employment, whether before or after his employment ceased. Next. Okay, section 13(1)(a) state that the total amount of gross income referred to in subsection 1, which is benefits, salary, wages, and so on, shall include any amount of output tax paid under the Goods and Services Tax Act 2014 in connection with the gross income which is borne by employer. Output tax is a GST that charged on sales. Okay, section 30, subsection 2, employment income is regarded as derived from Malaysia and subject to Malaysian tax where employee exercise employment in Malaysia on paid leave is attributable to the exercise of an employment in Malaysia, perform duties outside Malaysia which are incidental to the exercise of an employment in Malaysia. Means employee duties performed outside Malaysia are connected with employees' regular duties in Malaysia. The director of a company resident in Malaysia are employed to work on board or an aircraft or ship operated by person who is resident in Malaysia. Next is 13 subsection 3. Gross income of Malaysian citizens in respect of employment in public services or the service of a statutory authority must include amount receivable for any period during which employment is exercised outside Malaysia or least attributable to the exercise of the employment outside Malaysia. Section 13, subsection 4. For the purpose of any subsection 1, a benefit, amenity or leading accommodation provided for employee mentioned shall be deemed to be used or enjoyed by the employee if it is used or enjoyed by his spouse, family, servants, dependents or guests. Next. Next is general provision as to dividend income. Section 14, subsection 1 state that is company resident. So for the basis year for the year assessment, pay credits or distribute a dividend shall be deemed to be derived from Malaysia. 14, subsection 2, if company is not resident, so only dividend paid, credited or distributed by company or after the day on which the management and control of any business of company were first exercised in Malaysia shall be deemed to be derived from Malaysia. Where management and control of the business of closed company, or company does not carry on business, the management and control of its affairs by its director or other controlling authority is to be exercised in Malaysia but did not resident. So the dividends paid, credited or distributed shall not be deemed to be derived from Malaysia. Section 14 of Section 4 state that dividend consists of property other than money, the amount equal to the market value at the time of the distribution of the dividend. So I will pass to the Sarah.
Okay, I will proceed with the derivation of interest and royalty income in certain cases. The derivation of interest and royalty income lies under the section of 15 in Income Tax Act 1967. It states that the gross income in respect of interest or royalty shall be deemed to be derived from Malaysia if the responsibility for the payment lies with the government, state government or local authority, such as if, for example, if the interest come from the government's bond. And then the responsibility for payment or interest or royalty in a basis year lies with the person who is a resident for that basis year, for that particular year lah. And then for B2, section 15 B2, in the case of interest, only interest, not royalty, only interest, the payable is in respect of money borrowed by that person and employed in or laid out on asset used in or held for the production of any gross income of that person derived from Malaysia, or the debt in respect of which the interest is paid is secured by any property or asset situated in Malaysia. Okay, this statement is quite confusing, but I'll give the example. Okay, the example for this statement is, okay, if a company is a resident company in Malaysia and then they purchase an equipment from Taiwan, for example, and they purchase the equipment for the manufacturing business purpose lah, where the business is located in Malaysia, and then they secured the extended credit from the Taiwanese equipment supplier and paid interest. So the company is a resident and they borrowed money to acquire an asset. And the example is then they want to purchase the equipment for their manufacturing business, right? So they borrowed the money to acquire the asset to be used in their business in Malaysia. And for the statement of the debt in respect of which the interest is paid is secured by any property or asset situated in Malaysia. For example, is when a company, for example, a company who is a resident in Malaysia and they obtain a loan from Singapore, contohnya, from Singapore to finance its acquisition to purchase a land in Indonesia, but they, in order to secure the loan, they use their property in Kuala Lumpur in Malaysia as the collateral for the loan. That's the example for that statement lah. And then for 15C, if the interest or royalty is charged as outgoing or expenses against any income accruing in or derived from Malaysia. Okay, next.
All right, hold on, Sarah Rose. Can you go back to your earlier slide? I think that because this slide is very important on the understanding of the interest income. Yeah. So why we look into the derivation is that you know that you have income under section 4A, B, C, D, E, F, right? But for that income to be taxed in Malaysia, you have to see whether the income is derived in Malaysia. You know that, for example, in the case of interest income, it's taxable under 4C. But you also have to look at whether the income, in this case, the interest income is derived in Malaysia. You can have an interest income, but if it's not derived in Malaysia, that is not taxable. Right? I hope that you understand that. Not you, I mean the whole group, the class, yeah? Why is it so important in terms of this interest income? Because for an interest income, the derivation is not only the payer is in this case, who's the pay? We're talking about your example just now, you purchase an equipment, isn't it?
Yes.
You purchase an equipment And then for that equipment, you have to pay interest.
Mm-hmm.
Is it? Right? So you pay interest to whom?
Pay interest to, kalau for the purchase equipment, they pay interest to the
Taiwanese
supplier
company.
of equipment.
Is it Taiwan, is it? Was it Taiwan just now?
Yes.
Okay. Okay, my question is to the class. Who is actually subject to tax now? Is it the Malaysian company or the Taiwan company?
Taiwan company.
Taiwan company. Why you say that that Taiwan company is the one who is subject to tax? You nampak tak? Why I'm bringing this out? Because you may listen to the presentation, but you cannot connect. Alright? So why you say that Taiwan is actually the one who is supposed to pay tax? Not the Malaysian company. I rephrase. Who actually received the interest income? Who actually received the interest income? We have two companies. One is a Malaysian company. The other one is a Taiwan company.
So,
In the example given by Sarah Rose. Yes. Siapa?
Taiwan.
Taiwan, because Taiwan yang receive the interest income from the Malaysian company. Okay, so you know that interest income is subject under section 4C. My second question is that, do you think that the Taiwan company that receive interest income is subject to tax in Malaysia? And if yes, why? Why did you say that interest received by the Taiwan company is subject to Malaysian tax?
it's being derived from Malaysia
Why you say it's derived from Malaysia?
because it's associated with the operations in Malaysia, like for the interest.
Again?
I
Because
mean, the interest is the loan is for operations in Malaysia.
alright. But for that, alright, that is the second condition. The first condition apa? To be for that income interest, the interest income received by the Taiwan is subject to tax in Malaysia because number one, the company that pays, which company that pay the interest to the Taiwan company?
Malaysia.
Malaysian company. Is the Malaysian company a resident company? In your example. Yeah.
Yes.
So nampak? Now you apply your B1. In order for the interest income to be subject to tax, number one, company that pay the tax, company that pays the dividend, company that pays the interest to the Taiwan company must be a Malaysian resident company. If the Malaysian company is not resident, that is possible, yeah? It's not resident, then you are not subject to tax. The Taiwan company don't have to pay tax on the interest income. But now you have to pay, number one, you have fulfilled one only. But for interest, for it to be derived in Malaysia, not only the payer must be a Malaysian resident company, but the company must also, the Malaysian company must use the money borrowed, all right, from the Taiwan company for the purpose of asset used in the production of income, right? Or use or employ in the business or production of any income in Malaysia. Right, and then of course they say that secured by any property, because for you to borrow money, all right, money from anywhere, you must have some kind of security, right? So in this case, the security must be any property or asset in Malaysia. So for you to answer, all right, the scenario is simple je, all right. I give you example macam Sarah Rose bagi, all right, a company borrow money from Taiwan, all right, and for that they have to pay interest income. Then you have to justify whether the interest income subject to tax in Malaysia. So how are you going to answer that? We have to use this one, B1 and B2. Right? So when the presenter, all right, I know that this section, this presentation is a lot of laws. Because memang derivation you kena tengok law. So maybe you may fall to sleep lah. Alright, so that's why I try to cut and see that whether you actually be able to apply this knowledge. All right, we say that, okay, interest income is subject to tax if it's derived in Malaysia, and how you look at the derivation. Number one, company that pay the interest must be a Malaysian Malaysian resident company, and right, the money borrowed must be used in the business in Malaysia, either on the production, means that you can use it as a working capital, for example, or you can use the money on an asset, and the asset must be used in the production of income in Malaysia, and plus, of course, secured by any property. Right? Can you see the application of this knowledge? So you not simply baca and not simply, oh, okay, listen, but you must know how you're going to apply the knowledge, right? Because question for advanced tax is not so much on the computation, it's more of the theoretical. All right, Rose, I give back the floor to you.
Thank you, Doctor. Okay, I'll proceed with the derivation of special classes of income in certain cases. Okay, this derivation lies in section 15A, and where the gross income in respect of amount paid in consideration is used when the amount paid in consideration of services rendered by a person with the use of property or right belonging to, or the installation or operation of any property, machinery, or any other apparatus from the company lah. And then for 15AB, the amount paid in consideration of any advice that are given, or assistance or service rendered in connection with the management. This is the advice on the management or administration of any scientific, industrial, or commercial undertaking, and etc.
Stop there.
Yes.
All right, when I say that this income, all right, you're looking at the derivation. Which income actually you are referring to here? Which section of income?
Special classes income,
Under which section?
section 4F.
Wrong.
No.
Section 4A.
Section 4. You kena sebut section 4BA. Kau cakap section 4A ni kepada business income. Okay? Must be section 4BA. It means that income received by whom?
Non-resident person.
Non-resident person. Yeah, very good. So it means that you dah tahu dah, section 4BA, kalau non-resident person receive income of this, alright, then you know that, okay, the income is derived in, is taxable, alright, it's taxable in Malaysia, but is it derived in Malaysia? Because not only you know that, okay, this income is taxable, but is it derived? Because remember, section 3 kata income accrued or derived in Malaysia. So kalau income tu tak derived, is not derived in Malaysia, then you don't have to worry because you don't have to pay tax in Malaysia. But if the non-resident, alright, receive the income for the purpose of all these, then, right, in this case, in respect of kan, derivation dah keluar ke belum? Belum lagi. So you know that this is actually referred to income of section 4BA. Tapi derivation have not come through, right, Sarah? Okay, you are coming after this.
Okay, and then for 15AC, the rent or other payments made under any agreement or arrangement for the use of any movable property. Movable property here means the property that you can own and you can take with you lah. For example, such as stock and shares. And then the rent for the movable property should be deemed to be derived from Malaysia if the responsibility for payment lies with the government, state government, or local authority, and person who is a resident, and also if the payment of the above is charged as outgoing or expenses in the account of a business carried on in Malaysia. Basically, this derivation of special classes quite similar with what had been presented by Siti Aisyah from the previous group. Next, for derivation of gains or profits in certain cases, this lies under section 15B in Income Tax Act. Yeah, this one is which income from the paragraph 4F, which is the under income. This section states that the gross income in respect of gains or profits to which paragraph 4F applies shall be deemed to be derived from Malaysia if the responsibility for payment lies with the government, state government or local authority. And it also responsibility for the payment with the person who is a resident for that basis year. And if the payment of such gain or profit is charged as outgoing or expenses for business carried out in Malaysia. And lastly is the derivation of pension. Derivation of pension lies under section 17. It states that as for section 17(1) states that gross income in respect of pension from the government, a state government should be deemed to be derived from Malaysia. For example, here is EPF, Employment Provident Fund, and then for section 72, where a person has a right to a pension or other like payment from the pension fund, pension scheme, or by virtue of his membership of a pension society or a society of a similar kind. And the forums of the administration of fund, scheme or society in Malaysia at any year of assessment, the gross income of the pension in that year shall be deemed to be derived from Malaysia. So that's all from us. Thank you.
Right, thank you, group 2. Right. Um, um, right. Because I noted that yes, this topic a lot of a lot of sections that you have to go through. All right, but actually, all right, if you were to look into this, actually you can see, okay, the first group has actually looking at the charging section. All right, charging of income. So you have this section 4 A, B, C, D, E, M, and section 4 B, A. So that is the income which is chargeable to tax. But in order for this income to be chargeable to tax, it has to be accrued or derived in Malaysia. So the second group actually looking at the derivation of the income in Malaysia. You see the difference? All right, so it's interrelated, or it's very interrelated between these two topics, and you should be able to differentiate between income, which, for example, you're talking about business income. How would you decide whether the income received by a person, you know that it's a business income, but is it taxable in Malaysia? Then you have to look at whether the income is derived in Malaysia. So you have to look at what are the derivation for business income. Similarly for employment income. So if the income is employment, it should be under section 4B, but whether you have to pay tax to Malaysian government, then depends whether the employment income is derived in Malaysia. So you have to look at the one that they have presented earlier, right? But talking about your income from your dividend, all right, dividend, royalty, what else? Other section 4BA is almost the same. All right, almost the same. Why I say that almost the same, you say the income is derived in Malaysia when, all right, you're talking about dividend, you're talking about royalty, right? What else? Section 4BA means that number one is either paid by government. All right, government here, you can be a federal government, it could be local, state government, it could also be local authority. So if the income is paid by these, then you know that the income is derived in Malaysia. Number two is that or, sebab dia punya or. So either one. So ada tiga area, right? So if you say that income is, kalau it's not paid by the local government or not paid by government, then if the payment is made by a resident person. So person here could be an individual, could be company, right? So if the income is paid by a resident person, then it is derived in Malaysia. All right. But what if the payment is paid by a non-resident person? Right, then the tak fulfill lah number two. But it could be that that person that made the payment is a non-resident person, but in the income expenses, dia ada interest. For example, ada payment of royalty. Right, you're talking about this company that pay royalty is a non-resident company, but the royalty expense appears in dia punya statement, income statement. So that royalty is charged and an outgoing or expense in the accounts of the business carried on in Malaysia. So do you understand number 3 now? So all this one maybe you baca interest royalty charge as an outgoing expense. What do you mean? It means that it could be a non-resident person, but if you see that that expense is charged as an outgoing or expense in the person's account, right, to the person is an expense, but to the person who actually received is an income. So the issue here whether the person that received the income has to pay tax in Malaysia. That's how you see 1, 2, 3. The only different additional requirement is for interest income. Because interest income, you have to look at the part number 2, where it says that if it's a resident company, not only is a resident company, but the money borrowed must be used in the purpose of income production. Itu additional for interest. Because it's very important kalau interest income in order mean that, katalah you just that, okay, you borrow money from a resident person, but you don't use the money for the purpose of production of income. So the person that you pay interest, all right, the one who receive the income, interest income, are not subject to tax. Why? Because tak fulfill the 2 requirements, resident and used in the production of income. Mean that the money that you borrow used in the production of income. Can you see the difference between interest income and other income when it comes to the derivation, right? And of course talking about pension tu dah lain lah, sebab pension tu derivationnya masih paid by the government or any special fund, for example, yeah. So that is actually the importance of the derivation, right? We can't say that all income A, B, C, D is derived in Malaysia, but you have to look at the scenario. So again, the question can be, right, if the income, it means that selalunya soalannya, is the person subject to tax? Is the income received by that person subject to tax? Then you have to justify lah, yes or no. Alright, again, you have to provide justification. Why you say that the income is taxable? Because it's derived in Malaysia based on, then you say lah, maybe paid by the government, or maybe the company is a resident, or maybe it's paid out as outgoing. So this is the justification that you have to provide, right? But in the case of interest, you're going to add one more condition. All right, is that clear? All right. So thank you for the group. I know that it's longer, so I may not be able to restrict you for 15 minutes because it depends on the topic. Some topics need further clarification. Some topics need longer explanation, right? And sometimes I have to interrupt in between to ensure that other students are also engaged in the discussion, not discussion, in the presentation, right? So thank you again for group 2. Can we have group 3 for the next presentation?
Yep. Wait a minute. Can everyone see the slide?
Yes, please.
Okay. Good morning to Dr. and all my classmates. We are from Group 3, and we are presenting about the batches of trade. And I am Lin Qiwei. The other member are Ng Seng Hun, Tin Che Guan, and Tinesh. So let's start. So first, what is the basic of the concept of the batches of trade? The batches of trade is a set of key indicators to determine the transaction, whether it's trading activity. And in 1955, the Royal Commission on the Taxation of Profit and Income, they have reviewed some tests and identified the 6 batches of trade. And now the HM Revenue and Customs, they have add on another 3 batches of trade, so now have the 9 batches of trade. Okay, so now I pass to the next presenter to present about the 9 batches of trade.
Then for the first measure is a profit sinking motion. Because when a person who enter into the transaction, we need to identify whether there is a profit or not. Then one is not to exceed of the profit. That is important because the motor can be earned to one. So in the case we can see the ruler fees CIR in year 1929. The case we will be seeing is the tax payable. He purchased a 1 million Thai stock, and when he returned to the UK, he sold to the other person, and he used for he want to get a profit because when the amount he buy is high quality, and he's not will be used by own or doing any investment purpose because when he return, he sell it to the other. Then in this case, the profit made on this other quantity single purchase and resell the item was considered as an adventure in the nature of trade. Then the second is the number of the transaction. A single transaction can amount to trading activity, and it cannot be repeat or a systematic transaction. For example, like when I selling a car and selling my own car in 4 years ago, and next year I sell it, I buy another car and sell it another month and repeat by selling and buying, then the HNR will consider I is trading in the car. So in the case we can see the perform free quick in year 1927. In the case the payable, he bought an asset to a spinning mill business, and he and his partner decide to take the mill or the asset and sell in his mill, making a profit. So he and his partner trying to sell it and repeat selling and doing this this module into the 4 times. And this single transaction of this nature has been treated and capital, but the frequency of the activity get in color of trading and the profit is liable to that. So in this case, he is liability to pay an income tax. Second is the nature of the asset. And in this area, it is difficult to concern asset because there are generally bought in 3 different situations, which an investment that has the ability to generate the income. Another is the personal asset. That is the asset used by trade such as the plant and mechanical and machinery. Then the case in this figure is the IRC was registered in year 1942. In the case, the payable purchased larger amount of the whiskey, and he also selling the whiskey is to get the profit in another single transaction. Then after purchase the whiskey and resell the whiskey, is also considered as the adventure is the nature of trade. And in this case, there is no other justifiable reason to purchase such larger quantity of whiskey. So it's also not reasonable to be considered to be for own consumer, and there is in the picture evidence to indicate investment proposal. Then next we'll pass to the another presenter.
Okay, so this is the number 4 of the batches of trade. So from here, the number 4 batches of trade is the existence of similar trading, transaction, or interest. So from here, we can look at in a case, which is the case CIR versus the fraser. The respondent, which is the fraser, is a woodcutter. And before we enter the case, we need to know that the
I'm sorry to interrupt. Is this case the same as the previous one on the whiskey? Is it or is it the same case? The one presented earlier, this one. This one is IRC and Fraser, right? So the next one is Fraser.
Same case, yeah, same case.
I think it's the same case. Should we continue?
Yes, yes, yes.
So we just sorry.
Yes, please continue.
Oh yeah. So just now the team has explained about the case, so I just explain about it again. So the respondent, who is the woodcutter, they have not dealing with in whiskey before or after the above transaction, which means that before and after the transaction of this selling whiskey, they have not done before. What is that mean is before and after that transaction, they have no sales any whiskey. Like this is the single transaction only. And he was a man of little education with no special knowledge of the whiskey trade, which means that he does not any, he don't have any knowledge about the whiskey. So in 1937, he bought a consignment of whiskey in bond at the price of 407, and in 1940 he sell off the whiskey at the price of 1,131. And from here, the judge said that the purchaser of a large quantity of whiskey, greatly in excess of what could be used by himself, his family, and friends. It means that this large whiskey already exceeds that he can use. And a committee which yet no pressure of position, which cannot be turned to account, except by a process of realization. So from my understanding of this, it means that the whiskey only have the value when he sells the whiskey. He cannot collect it and put it and until maybe in the next 10 years or next 30 years and sell it. Like increase the value of the whiskey. And the most important of all, the actual dealing of the respondent with the whiskey were exactly of the kind that take place in ordinary trade. So which means that he buy and sells the whiskey just like an ordinary trade. Right? Okay. The next.
Before you go into, can you go to the next one? Before next one is. All right. You go back.
Next one.
Okay. Go back to the.
Go back.
Go back. Go back.
Go back. Right.
Okay. This one is CRR against Fraser, and the earliest slide is RRC against Fraser. Can you tell me the difference between these two? Why the here 1942 is RRC against Fraser, and the next slide, Fraser, is it the same? Next slide is CIR against Fraser. Is this the same court or different court? And why do you have two here? This is CIR dengan IRC. Is it the same?
From my understanding, it is the same.
Because if CIR, IRC, I think it should be the same But you have to check which one is the correct one. Is it IRC or CIR?
I have Googled it before.
But I believe that, all right, I believe that it has to be the same case. It's just that you see the perspective from different, right? In this case, number here existing or similar trading transaction or interest. So you're saying that because you buy in a large, which is not normally common for a personal usage. That's why they just say that no, this fall under income or income which is subject to tax, isn't it? The earlier slide, the basis is that what is the basis of trade, nature of the asset. So how can you differentiate this explanation with the following explanation? Adventure in nature of trade, is it? Because I'm trying to understand myself. I know that it's the same case, right? But it's just that you're looking at different perspective. Number one, you want to look at the nature of the asset, where normally, all right, in this case, the whiskey you don't buy in large amount, right? So that's why in this case, it says that it just gives you the introduction that the taxpayer purchase whiskey, but then resale, right? But resale at a profit. So now what happened is that, okay, RRB said that, oh, the profit is taxable because income in nature or trade in nature. Yeah, so that's why, but of course, the justification is that because you don't actually buy such large amount for personal usage. And when you resell, there's an intention there. The motive is there, right? So I think that it's the same case, but it's just like looking for different perspective. But it's still the same because you're still looking at the purchase in large quantity for both slides, isn't it?
Yes.
Because I need to help other students to understand. Because I know that they won't ask you. So I have to ask you to make sure that I understand the slides. Right?
Okay.
So you can continue. It's okay. It's okay. Just that I just want to see how it is actually. Yeah. Okay. Proceed.
Okay. Yeah. Thank you for the explanation. And the next is about the change to the asset. So there is different is different of the nature of the asset. Is change to the asset. And any changes of modification made to an asset that may make it more marketable. So just like, for example, just like you buy a house and you do the renovation, so the house will be increased the value and it is more marketable. So in here we also see the case. The case is about the cap brandy syndicated versus CIR. So in this case, the member of a wine syndicated join in a separated syndicated to purchase brandy from South Africa. It means that he joins another company, and is the same. How to say the another company is also to sell the whiskey, right? And so from here after the brandy syndicated joined to the another company, the some of the whiskey was shipped to the east, with the remainder being sent to the London to be blended with French brandy and recashed and sold at a profit, which means that the part of the whiskey from the brandy syndicated has sent to the other country, and another has sent to the London, and they mix together with the French brandy and to resell this whiskey to the customer. And the tax payable tried to argue that the transactions was of a capital nature from the sale of an investment, which means that from here, they say that this is an investment, not an ordinary trade, because they have purchased the brand of the South Africa, right? And after that, the judge has stated it was held that a trade or business was carried on and was accessible as a trading profit. So it cannot categorize in an investment. The sales of an investment is categorized as a trading profit. Okay. Okay, so next I will pass to the next presenter.
Hello. For this page is the way the sales was carried out. So the asset sold in a way like trading organization. So it's just like the normal activity of organization. So then this transaction is indicated as trading. So for an example, here is CIR versus Livingstone and others 1926. So the respondent began by getting together a capital stock sufficient to buy a second-hand vessel and to convert it into a marketable drifter. So they bought the vessel and caused it to be converted at their expense with their objective in a view. So and they successfully put her on the market. And for this case, from beginning to the end, all the operation of this transaction is just like is same like the like a trading of converting and fitting the second-hand asset for sales. So this is the nature of trade. So this transaction is trading. Actually, in this theory, we can put another phrases here, which is the Fraser case just now, the whiskey case. In the whiskey case, they buy the whiskey in a large quantity, and this quantity is not considered for for own consumption. So and this can be determined as a nature of trade because in they purchase and sells a large quantity of the whiskey is just like the nature of trade. So in for that case, we can use in this theory also. Next. Um, for the source of finance, which the method of financing should be determined when the money is borrowed to buy asset and the loan should be repaid by selling that asset. So, which means when you HRMC can argue that the asset is purchased specifically with a view to selling it again. So with the example case here, Wisdom versus Chamberlain. So in this case, Wisdom Norman purchased silver bullion by using high interest rate loan. In order to repay the loan, uh, he have to sell the bullion quickly. So which means because of the high interest rate, so he cannot service the interest payment from their cash flow. So he have to sell the bullion again quickly. So in this case, the profit there is a profit here when selling the silver bullion again. So this profit was taxed as the trading income. Next.
So next, I will continue my part, which is the egg of the batch of trade is the interval of time between purchase and sales. So in this part, they will talk about which is the important indicator of trade was the length of time and the asset is held. So the shorter the period of ownership, then the more likely there is to be trade and vice versa. This means that the assets that are subject to trade will always normally be sold very quickly, but not always. This means when someone hold an asset for a long time, there will be more chance they consider as an investment, not a trade. But let's say if you hold a asset for a shorter period, they can be called that as a trade. So for an example, before the contract of purchase is made, a contract for resales is already in place. So this means that there is a very strong pointer toward a trading deal rather than an investment. So the example case is Wisdom versus Chamberlain, as mentioned earlier by Sang. So in this case, Wisdom purchased a silver bullion using a high interest rate of loan. In order to repay the loan, he have to sell the bullion quickly. So he sold it within a year and made a profit in such transaction. So this considered as a trade because the purchase was done on a short-term basis in order to realize the profit, and it's called trading profit. So next case is Marston versus Morton. In this case, there was a land purchased by this guy with an intention to hold it as an investment. So in the earlier, it's already said it's intention to hold as an investment, not a trade. So no income was generated by the land, and the land was sold later following an unsolicited offer. So the transaction was far removed from the taxpayer, which from Marston, and actually this guy, they are doing a business as a potato merchant. So the buying this land is not as for their business using. So it's considered as an investment. Therefore, the transaction was not an adventure in the nature of a trade. So in the conclusion, this can say that when you want to buy something, you can, if you keep for a long time, it will be considered as an investment. But let's say you buy for a shorter period, it can be said as a trade. So next slide is the method of acquisition.
Hold on, yeah.
Yeah.
I just want to know, why is it that the cases here, for example, in the case of Mason and Morton just now, because normally in tax cases we see that the argument is between the taxpayer and the inland revenue, but here Wisdom and Chamberlain, who is actually, why are you Wisdom and Chamberlain? Are these taxpayers or what? Do you have any idea on that? And Marcel and Morton,
Actually, Wisdom is the taxpayer because
Wisdom, and then
he buy the
Chamberlain,
silver bullion.
Chamberlain
Chamberlain,
is the judge.
I think it's the charge because we found in Google they didn't mention about his name, or he just mentioned Wisdom.
Because normally we have, for example, Wisdom and CIR, right? And normally it's like that, but in this case we see the name, so maybe it refers to the judge, right? Because if it puts as a judge, then it's more challenging to see the movement of the case, right? So why is it so important about the movement of the case, right? Just this one is out, just to share with you that the understanding is that, all right, normally first case, if as a taxpayer, all right, and then suddenly say that RB say that, okay, this one taxable, and you say that it's not taxable, right? So that will be, then you can see who actually bring the case to the court. Is it the taxpayer or the inland revenue, right? And then if you say that it's the taxpayer that bring the case, then you see that the name of the taxpayer in front against the inland revenue, right? But assuming that in the first court, it say that, okay, RB lose. You say that, okay, it's not taxable. Of course, RB will go to the next level of courts to further to prove that no, the income is still taxable, right? So now, second court, you have your inland revenue against the taxpayer. So that's why the name, all right, sometimes we have to understand the case, all right, to make it more interesting. If you can actually look at the start of the case and the movement of the case, right? So, but in this case, bila nampak Wisdom and Chamberlain, I do not know who's the taxpayer. But in this case, you mentioned Wisdom that bought the silver bullion, so you know that's the taxpayer. I believe that Chamberlain here is the judge, could be, right? All right. So just to get you to know about the cases, because, right, accounting, taxation, if you're talking about accounting degree, right, taxation is more on the computation. It's more on the application. But you're talking about others, right, the law, right, if you're talking about faculty of laws, right, tax is all about cases, right? So, but we don't really actually, except for this topic and the theoretical part, we look into the cases. Yeah, all right, thank you. Please continue.
So this is the last page of trade, method of acquisition. So This means that an asset that is acquired by inheritance or some other gift is unlikely to constitute as a trading transaction, which an asset acquired at a market could indicate that it has either been purchased for a trade or an investment. An asset that bought with the intention of holding it for the long term is less likely to consider as trading asset, even if a subsequent change in intention. So this means that when you acquire an asset, which the asset is given by somebody or is like waris, so this cannot be said that as a trading because it is someone give to you. So let's say if you buy in the market, it can be shown as a trade or an investment. So for the example case is Taylor versus Good. Taylor is a businessman which he purchased a house with an intention using as a family home. So the partner or his wife said that he didn't approve the house and refused to move in. Therefore, which forced Taylor to sell the house immediately. But he just purchased recently. So the purchaser, which is Taylor, genuinely had the intention of not buying the property for profit motive. He actually want to use it as a family home. So therefore, the judge said that the intention to trade could not be formed later. So which means that it is not as a trade. It's not for a profit. So there are not any trading occur in here. Even the sale was a short period of time after the purchase, it was still not deemed as a trade. So that's all. In conclusion, there are 9 badges of trade should be considered in the round. No one badge is likely to determinative, but all badges must be considered and given an appropriate weight in deciding whether an activity is of a trading nature. This means that every batch of trade, they have their own criteria and own perspective. So we need to estimate properly to decide whether it's a trading or not a trading. So that's all.
All right, thank you to group 3. All right. So how many badges of trade actually?
9.
You can, how?
9.
9?
Yeah.
Right. Yeah, I think it's 9. Accounting tak ada, bookkeeping, all that. Ada something on accounting. Memang you check that later. Alright, so more importantly on this topic is actually given a scenario, so it's always about scenario, alright, you have to decide whether the income received by the person is trade in nature. If it's trade in nature, then it's subject to income tax. Alright, but again, alright, as you see that again, it's always the RB say that that one is taxable. Taxpayer will say no, it's non-taxable because of this. So you have to provide your justification. You may not use all the 9 badges of trade, but choose the one which is very or more relevant to the scenario given. Right? You may not have to give me 9 badges of trade, right? But choose the one that is very convincing, right? In order to help you to decide whether the income is taxable or non-taxable. And the more importantly is that you see that it's always about motive, right? But motive is something that is very abstract. You can't see the motive unless it was documented, right? But you say that, okay, I purchased, my intention is to make it as an investment. But again, all right, how would RB say that, oh, no, I don't think your intention is for investment, it's for profit making. Right, so that's how you have to make a case to show that, or as a taxpayer, of course, you will say that it's not taxable, and use all these 1, 2, 3, 4, 5, for example, to show that no, this is not taxable. And of course, you have to use cases, right? Case law to support your judgment. Yeah. So that is the good thing about this topic. Again, it's a revision. This one is tax 1 punya topic, right? But again, at an advanced level, everything comes back. Yeah, and to show now the level here is that at the advanced level, you have to be able to justify. You have to show your understanding of the concept that you have learned in tax 1, for example. Okay. And this again is always a favorite question in a professional exam. Okay. Right. Thank you again to the group. Now it's 5:40. Can we have one more group? We're supposed to have 5 groups, isn't it? Wages of trade, digital. I think transfer pricing has to be postponed to next class. Okay?
Wow, Tame, where are you?
Okay, the next group. Yeah, you have the floor.
Okay. All right. So my name is Tamal, and my team will present about digital services tax in Malaysia. And my team members are Divna, Nishadan, and so just to give a little bit of a background about what digital services is, so digital services tax is, it was introduced during previous budget tabling, and basically digital services tax was introduced to level the playing field between the digital service providers in Malaysia and also foreign digital service providers. So Digital Services Tax or DST is governed under Service Tax Act 2018. And it's defined as any service that is delivered or subscribed over the internet or other electronic network, and it cannot be obtained without the use of information technology, and the delivery of the service is essentially automated. The imposition and scope of tax is effective from 1st January this year, and the service tax shall be charged and levied on any digital service provided by a foreign registered person to any person in Malaysia, and the rate is 6%. So what are digital services? So to your left, these are some of the examples of the digital services. And who's affected by this is that first is the content provider. For example, if you use Spotify or Netflix, these are known as foreign content providers. For digital services, for example, if you use Microsoft's Office or any cloud storage providers, they are known as digital services. For digital products, if you purchase any apps from Google Play Store or App Store, they also subject to digital services tax under the digital products category. Who are not affected is that our local digital service providers such as Grab and Astro, because they are already subject to tax under SST. So some services do not attract DST, and services which are not considered as digital services are services that can be obtained without the use of IT and the transmission of services via email. Like for example, if you receive any design or prototype from your client overseas via email, that won't be considered as a digital service and won't be subject to DST. And digital services which are not subject to services tax effective from 1st January 2020 are online distance learning and also online newspaper, online journals, and periodicals. So those companies, foreign companies providing these services won't be subject to DST. So who is a foreign service provider? So it's defined in the yes.
Hold on, yeah. So means that we have digital service tax and we also have sales and service tax. Is it service tax?
Yes.
So is
under service tax.
so if you are under service tax, you don't have to be under DST. Is it digital service tax?
Tax only for local digital service providers. This digital service tax only for foreign service providers.
Okay, very good. Thank you.
Correct. So let me define who is a foreign service provider. It's considered as any person, either business or individual, who is outside Malaysia, who provides any digital service to a consumer. The person also operates any online platform for buying and selling of goods, providing services, and makes transaction for provision of digital services on, cannot see that. Okay. So foreign registered person is any foreign service provider who is registered under Section 56C of the Service Tax Act. So let's look at some examples of how to determine the FSP status. So first situation is the digital services provided directly. For example, Spotify sells audio streaming services using its own website without a platform to a consumer and issues invoice to a consumer to request for payment. So this is service provided directly. Another situation is a digital service sold on behalf of service provided through an online platform. Let's consider this example. Easy.com is a foreign service provider. It's a platform which offers online business presentation templates. Easy.com could be any platform. For example, Amazon could be also an example for this. So it says online business presentation templates, which is a digital service to consumer. So both Spotify and Easy.com are considered as foreign service providers and have to account for services tax on digital services. So who is a consumer? A consumer could be businesses or individual and include such person in designated area and special areas. Designated areas are Labuan, Langkawi, and Tioman, and special areas include free zones, licensed warehouses, and joint development areas, for example. So to be qualified as a consumer, one has to fulfill any two of these conditions. First, that person has to make payment for digital services using credit or debit facility provided by any financial institution or company in Malaysia. And that person acquires digital services using an internet protocol address registered in Malaysia or an international mobile phone country code assigned to Malaysia, or that person resides in Malaysia. So how can a foreign service provider determine if the consumer is residing in Malaysia? So the foreign registered person can see the billing address of the consumer in Malaysia, the home address of the consumer, and the recipient's country selection upon registration or purchase in Malaysia. So in example one, ABC company is a foreign service provider sells digital services to consumer, and the company can use information such as the Malaysian credit card and Malaysian billing address to determine the residency of the Malaysian consumer. Second example, for example, Netflix, foreign service provider sells streaming platform on a subscription basis to consumer. So for subscription service like this, sometimes consumer may be, let's say from January until June, the consumer is in Malaysia, and then for the rest of the year, the consumer is outside Malaysia. So that person will be considered consumer only for those 6 months. So DST for businesses who have been charged this services tax on digital services by FRP is exempted from liability to account for service tax on imported taxable services. You can compare this to withholding taxes, right? If for withholding taxes, the payer is required to withhold the tax on payment and remedy to IRB later. But for DST, it's not. The person who has to pay the tax is the foreign service provider and not the business who acquire the service. And for registration is mandatory, and the foreign service provider has to satisfy two conditions. They have to provide the digital service to consumers in Malaysia, and the value of the digital service for a period of 12 months or less exceed the threshold of 500,000 ringgit. So if these two conditions are satisfied, then the foreign service provider will be liable to be registered under the Section 56B of Service Tax Act 2018. So the value of digital service of period of 12 months has two ways of determining. One is historical method and future method. I'll skip this due to time constraint. I'll move to the examples. So calculation for the value of digital service is based on category of the person. For foreign service provider, all digital service sold directly to consumer in Malaysia will be considered the value of digital service to determine the 500,000 threshold. For example, XYZ Inc. provided PowerPoint templates through its own website, and the total value of the PowerPoint template sold to consumers in Malaysia is 800,000 ringgit. So XYZ has exceeded the prescribed threshold, which is 500,000, and would be liable to be registered. Second category is the online platform operator, for example, Amazon, who satisfy the condition of foreign service provider. And the value is be determined by digital services sold to consumer in Malaysia on behalf of the FSP through the online platform. For example, XYZ Inc. sells PowerPoint template through an online platform, which is easy.com. And the total value of sales through easy.com to consumers in Malaysia is 4 million ringgit. So this exceeded the threshold, and easy.com will be liable to register. XYZ won't be required to register because easy.com is the platform who acts on behalf of the foreign service XYZ Incorporated. Next category is it is a hybrid where the foreign service provider sell directly to consumer plus sell indirectly through the online platform operator. So in this case, the value will be all digital services sold directly to consumer. So for example, XYZ Incorporated provide PowerPoint template on its own website, and the total value of the PowerPoint template sold to consumer is 350,000. At the same time, the company also places a PowerPoint template on easy.com platform, and the total value of the sales to consumers in Malaysia through easy.com is 400 million. So the easy.com has not exceeded the threshold because the digital services sold directly to consumer is 350,000 ringgit. So in order to apply for the registration, the foreign service provider has satisfied these conditions. The foreign service provider is liable to register under the implementation of service tax on digital services not later than the last day of the month following the month in which they exceed the threshold. Let's see the example here. Resma App Incorporated provided digital services, and the value of digital service made to consumers in Malaysia has exceeded 500,000 ringgit on 15th of February. So Resma Act Incorporated is liable to register on 29th of February and must apply for registration between the period of 1st March to 31st March of 2020. Next, I present to pass to Nishadan. Nishadan, are you there?
Yes. Can you hear me? Accounting for tax, issuance of invoice, FRP is required under Section 56G STA to issue an invoice or document containing prescribed particulars to the consumer um, in respect of transaction. The invoice or document that related to provisions or the of digital service to consumer shall state the following particulars such as date of invoice, uh, uh, registration number of the FRP, a description sufficient to identify the digital service provided, the total amount payable excluding service tax, the rate of tax, service tax, sorry, and the total service tax chargeable shown as separate amount. Okay, next. The accounting basis, the service tax for digital service chargeable under subsection 56A in bracket 4 STA 2018 is due at the time when payment is received for the service provided to the consumer by the FRP. However, in order to facilitate FRP on the implementation of the service tax or on digital service, DG may provide administrative concession for the FRP to accounts service tax on an invoice basis. So FRP shall apply through my STO ODS system or service tax on digital system for this facility upon approval from DG. Service tax shall due at the time the invoice is issued. In the case of FRP who chooses to carry on a business of providing digital service or whose registration is suspended or revoked by the DG service tax law, digital service required to be accounted in any return made shall be due on the day the return is required to be furnished to the DG. Next. Next. Taxable period. The taxable period shall be period of 3 months or quarterly, ending on the last day of any month of any calendar year under subsection 56H in bracket 1 STA 2018 for the purpose of DST 02 return submission. Any registration made before effective date and the registration effective date is 1st January 2020. The taxable period as follows. Um, Billing frequency and taxable period. First tax period quarterly, January to March, and subsequent taxable period April to June, July to September, October to December 2020. Next. Next. Manner of furnishing. Furnishing on the quarterly basis according to the taxable period as required under Section 56H STA 2018 declaration that specification is true, accurate and complete. The value of digital service and the amount of STODs shall be declared in Malaysian ringgit. So where FRP charge consumer in currency other than Malaysian ringgit, FRP shall convert the total value of digital services and the amount of STODs to Malaysian ringgit. Conversation is phone conversation is done on daily basis. The uh, conversation is done at the end of the taxable period, the end of each taxable period, and also the time furnishing the DST 0210. Duty to keep records. FRP shall keep complete and true records written up to date of all transactions, all records of provision of digital service by the FRP, including invoices and any documents, all other records related to service tax on digital service. Any records kept shall be preserved for a period of 7 years from the latest date which records relate. Where the records in electronically readable form, the record shall be kept in such manner to enable the record to be readily accessible and convertible in writing. A copy of the record shall be admissible in evidence in any proceedings to the same extent as the record itself. Next, next I pass to the
Okay, so based on Section 38 of Service Tax Act 2018, a DG, which is the Director Governor, may grant a refund of service tax penalty, fee or other money to a person who overpaid or erroneously paid or is entitled to the refund under subsection 34 clause 6 and 40 clause 3. So the application for refund can be made online through Service Tax of Digital Services System by filling a form called DST ADM01 and other relevant forms. Refund shall be made separately according to the taxable period and shall apply it within 1 year after the payment mistake. Next is DG has the power to reduce or disallow any refund on the basis that the refund would unjustly enrich the claimant. And then the whole part of any service tax penalty, fee or other money shall be demanded by DG, whereas the demand must be made within 6 years from the date where refund was made. Okay, next page. Okay, so service tax amendment on provision of digital service spanning before and after the date of coming into operation, which will be called CIO, and during transitional period is provided under Section 52 of Service Tax Amendment Act 2019. So the date of CIO is on the 1st of January 2020. The first one is the provision of digital services spanning before and after the date of CIO. Any digital service that is provided before 1st of January 2020 is not subject to tax. Only after the date of CIO is when that service is chargeable to service tax. Okay, so the second one is provision of digital services before or after the date of CIO, where it is non-spanning. It's just the same. Any services provided before CIO is not subject to tax, but if it is provided after, then it is chargeable to tax. Next slide. Okay, number 3, payment in relation to the provision of digital service after the date of CIO. So there are several examples. The first one is when someone subscribes annually to a music platform for the period of 1st January until the 31st of December 2020 and they already made a full payment in the year 2019, there will be no service tax charge. However, recipient in Malaysia has to account service tax on imported taxable service, which is another different tax. The second example is Residing Limited issued an invoice on the 1st of November 2019 for the digital service that will be provided on the 1st of March 2020, which is next year. So the consumer named Shasha made the payment also on the 1st of November 2019. So Shasha will not be charged with any service tax. Next slide. So example 3 is Residing Limited issued an invoice on the 1st of November 2019 for a service that should be provided next year, which is the 1st of February 2020. Shasha paid the amount on the 1st of April 2020, which is also next year. So Residing Limited shall charge the service tax on her. And lastly is example 4, Residing Limited already provided a digital service on the 1st of November 2019. However, the payment for the digital service and invoice in relation to the provision of the digital service is issued after the 1st of January 2020. Therefore, Residing Limited shall not charge service tax since the digital service is provided before the date of CIO. So, next slide, okay. Compliance and enforcement. So the penalty scenarios are failure or late application for registration, late or non-filing of DST-02 returns, submission of incorrect DST-02 returns, late or non-payment of service tax on digital services due, failure to issue invoice or document as required by the Act, and failure to keep records. As for the penalty rate, if a person does not pay on the first 30 days, penalty will be 10% of the service tax. If they still fail to pay after the second 30 days, an additional penalty of 15% would be added. And if they still did not pay after the third 30 days, another 15% additional penalty will be added. Next slide. So the current issues in digital service tax in Malaysia for the fair share of taxes. So currently, global digital businesses are enjoying massive profits without physical presence in the country. So instead, these companies get to declare their profits in their country of origin. It is where their headquarters are located. So which means that other countries such as Malaysia will lose out on the potential tax revenue. Taxing the digital service, the digital sector means that there's a great opportunity for our government to receive additional assistance in strengthening and expanding revenue base. As for the compliance, the challenging issue facing customs is enforcement if the FSP fail to comply. The worst situation is when FSP collects the service tax but does not remit the tax to the customs. As for prices, only time will tell what mechanisms are most effective and whether FSPs will increase their prices to cover the digital service tax. So that is all from our group. Thank you.
Okay, thank you for group 4, group 1, 2, 3, 4, isn't it? So personally, I don't actually aware of this digital service tax, but looking at is the still 1st January 2020, so I think that I'm not too late. Right, thank you to the group for sharing the knowledge. All right, hopefully others will also benefit. And as you can see that in terms of the regulation, in terms of the record keeping, is almost similar to your sales and service tax, all right? In terms of the quarterly reporting, the quarterly, it's not reporting, what do you call that? Quarterly, all right?
Announcement.
No.
Results.
What was that, the quarterly just now? The billing, no, the billing. What do you call that? Tamil?
Wait, quarterly reporting again. Let me check.
No, the 3 months just now. So means that whatever expense income generated will be taxed in that quarter, right? Ni apa Tak apa, it's okay. Alright, so
Taxable period.
taxable period. Thank you. Right. So it's almost similar to your service tax and sales tax, yeah. But it's just that the content is a bit different, whereby it's on the digital service for foreign provider, isn't it? Foreign supplier, foreign FSP, yeah. I don't want to take so much of your time. Again, thank you because we already have past 6 o'clock. For Muslim, we need to go for our Asar prayer. All right, so thank you again for group 4, and I'm apologize for group 5 transfer pricing. I'm not sure whether it's a good news or a bad news that you are supposed to present today, but you have to postpone the presentation to the following class. Yeah, and just be prepared for every group. Yeah, so it's just that the timing may not be as accurate as what we have planned, right? But if you're ready, then it should not be a problem, right? So I think that's all for today. And remember that I have asked you, please discuss among yourself when you want it to be is your midterm exam date, right? So the midterm will cover up to your investment holding company, right? So decide on a date, and then the exam should be 2 hours kot. Normally, how long is your midterm exam? 2 hours? Yeah, so maybe we can budget for 2 hours exam online. Okay, so later you decide on the date, yeah, and time. So I think that's all for today. Thank you again for all the presenters. We hope that we benefit from all the presentation, and I hope to see you again next class on
Sunday.
Yeah. So with that, thank you and Assalamualaikum warahmatullahi and good evening.
Waalaikumsalam. Thank you, Doctor.
Thank you, Doctor.